Good morning. Welcome to Mornings with Michael, the weekend update. Hope everybody's been having a great weekend. So this is Ethereum. Had sold off earlier, much like Bitcoin, and it is bouncing back, not quite as high as it was before. You can look at it, the 5-day. It's kind of sold off from 2,600, trying to get back to those levels. And now we go over to Bitcoin. Big sell-off in Bitcoin. And go, see it got up here to 68,666, went all the way down here to 65,949, and now it's trying to bounce back here. So that is the story with Bitcoin. And let's go over and see what the week that was. Kind of ended with Microsoft, Apple, Google, Meta, Amazon, Nvidia. Semiconductors did pretty well. Few of the software sector did well, and some healthcare. Otherwise, it was kind of a mixed bag. And Tesla, so it was pretty much big cap tech kind of roaring back. And I think Tesla actually saved the day on the indexes this week with its earnings. So that is the story with that one. Let us go over to our PowerPoint presentation for this week. So there is this news out from Goldman Sachs this week. S&P 500 big gains, are they over? The S&P 500 index is expected to post an annualized nominal return of just 3% over the next 10 years, said Goldman Sachs. And so we'll take a look at, has this ever happened in the past over a whole decade? Of course it has, many times. Anything can happen on the market, and usually does. World War II influenza back, actually World War I and influenza. That was a great flu virus back then, killed millions of people, unfortunately. Yeah, back in 1918. So this was that area. And then we had the 1929 crash and the Great Depression. Then in the 1970s, we had inflation, Vietnam, and Watergate. Kind of sounds similar. Just change the name right now. And we get on to inflation, Ukraine, and Israel right now. And then we have the lost decade over here. Ukraine, rise of inflation and shortages. Will that lead to the lost decade again? So that is the story. Here's a closer look at the 1970s. Came up here. S&P 500 ends 1979 at the same price as 1965. So if you had your money in the market, you're basically going nowhere. And here's a recent lost decade in 2000, January 2000 to December of 2009. If you had $1 million, you'd have been better off in treasury bills, which would have grown to $1,313,631, where your $1 million would have shrunk by 100,000 at the end of the decade. So that is a story. That one, these are all charts from a group called Invest with Rules. So why are they predicting a lost decade? Well, if you look at the Shiller PE ratio, price to earnings ratio, they're peaking. So 1930, prices got extended and never got up to that price again. So same in the 1970s, sold off. And this is right around 2000. Prices were way extended up here. And this is where we are now. Prices are getting pretty pricey and extended right now. They're right at PE of 37.29 on average. So that's the why. The lost decade kind of back testing. See if I can increase the size of this a little bit. So this is just showing you there was a 57% drawdown from 2008 to 2009. That's something you definitely want to avoid. If that actually happens, that's why we frequently will bring that chart up temporarily. Stop the share, reshare. Let's see if we can get this up. And then we'll just reshare. So if that happens, let's see where that other chart went to. We have to start all over. Here we go. So if that happens, you'd be better off being in this type of vehicle, guaranteed to only go up. When the market goes up, your money will not go down. And there's kind of a mix of bonds, so probably get a little bit of juice from that as well. And beats index investing by about 5% per year. So I just wanted to show that chart temporarily. And now let's go back to our PowerPoint. So in 2002, sell off of 2337. If you had to kind of manage your portfolio, only went down 4.35%. And you can kind of look over here, the maximum drawdown was 19% instead of 57%. And the average annual return was 6%. So that is how that works. And in 2008, equity went down 10%. This is like we showed over here, the average gain was 6% with a maximum drawdown at 19%. And average of 7 trades per year. And so that is a lot better than having this huge drawdown and just listening to people and say, oh, just leave it in there, it'll come back. You never know if that's true or not. This chart includes the NASDAQ, S&P 500, and the Russell 2000 index. So let us go over here. Here's where we currently are. This is the Dow Industrial Average. The targets haven't changed any. So we're just going to bring up those targets so you can kind of compare. Hasn't hit those targets yet. But on the Dow Jones, the target is still 411.32. Kind of pulled back here. Got a bearish engulfing. What did it do? So this is a hanging man right up here. Got 2 hanging men in a row as bearish, even though it is in the green column, and followed by a bearish harami. And sure enough, it's come down. It's come below its 20-day moving average. What had provided support before is now more likely to provide resistance. So that is one negative on the bear. That's actually a positive on the bearish sign right here. Positive on the bearish sign as volume increases. And we're trending down on both stochastics and the CCI reading, which was developed by Don Lambert. So that is the story with that one. Here's the Dow Jones. Again, this is kind of, we talked about this a little before. Generally, these charts follow ABCD pattern. So this is A here where it pivoted lower, came down here to B. So there's a possibility it could bounce to come up to the moving average and then retrace lower to a D, and where it can possibly get down to the 411. So that is the Dow Jones Industrial Average. Moving over to, this is the IWM, Russell 2000. What do we got here? Once again, very similar. Even this is a bearish hanging man right here, followed by another bearish signal, bearish Harami, bearish engulfing. As you can see, it engulfs more than one day. We've got a attempt to be a doji as it bounces up here, but then it sells off again and gets below its moving averages. So how many negative signals do we have here? We got one. Volume increasing on the bearish, on the selling. So that's 2. Move down in stochastics, 3. And coming down here on the CCI is 4. And it's below the moving average. So that's 5 negative signals there. So let us move on to the NASDAQ. This is still the Russell 2000. Here's the NASDAQ. What we got here, got a bearish Harami, bearish engulfing, engulfs at least 2 days here. We got a bounce. This is bouncing off the moving average, followed by another bearish signal, a doji. Maybe a change is coming. There was a change for a couple of days, and then it sold off. Another bearish Harami, doji, change is coming, and it bounces, and this is a falling star. So this is a bearish signal. Even though there's a lot of volume here, a lot of that was selling. And what do we got here? The stochastics are moving down, even though the commodity channel index is moving up. So what we did not give the reading for the target for our Russell 2000 is 212.78, and the NASDAQ is 464.86, which is right about here, kind of filling that gap over here. Move over to the S&P 500. Once again, we got an ABCD pattern. So this right up here would be A, where we got a pivot, and it pulls back to the moving average. Possible is B, C, and D. So we got a bearish signal right here. Looks pretty close to a falling star. Increased volume on selling. Stochastics are moving down, and this is kind of in the neutral area. It is bouncing a little bit, but we'll just kind of see where that continues. And then this is on a weekly of the S&P 500. As you can see, we got a hanging man right up here. We had a kind of a doji right over here, 2 dojis in a row, and hanging man on increased volume. So you can kind of see that a little bit more. Moving down on the stochastics, moving down on the commodity channel index. So here we move over to the VIX, which is inversely correlated to the S&P 500. This is inverted, could call that an inverted hammer, which means that you're looking for some bullish price action. Got a little bit movement up and a nice movement up above the moving average. So let's move on, find out our S&P 500 target is still 555.58, and our target on the VIX is still 2688. So this is bullish. This is heading up. This is bullish as well. I kind of covered up the stochastics, but that is kind of the story there. Get back to the screen here, just kind of showing, talked a little bit about silver this week. Silver, there's a lot of banks in trouble. And why is that? Banks are in trouble because they've been shorting silver. And look at the price move on silver. Just keeps etching higher and higher. I kind of think there's going to be a pullback as this, pretty well extended above the moving average. So that's one negative for it. Looks like we got a falling star right here. So let us just talk about the 80-20 rule. So 80% of the time, these signals are going to signal a move up. Usually the 20% when they're wrong is on the when they get really extended and very toppy up here. So that's where you kind of got to watch out on these signals. And that this is what is kind of happening. Got two bearish signals and got pretty close to a falling star there. We got lower volume on the little bit of a move up. We got a pullback in the stochastics, pullback in the commodity channel index. So if the economy and earnings are so great, how come the share of the Russell 2000 companies with negative earnings continues to rise? Look at this, just keeps going higher and higher. A little bit of a pullback here and then moves higher. A lot of the companies on the Russell 2000 are biotechs, which are losing money, and smaller banks. So that's something to watch out for. Maybe 1 year in the future, the Russell 2000 will take a lead again, but it just isn't going to be this time. So let us adjust this. So Americans' excess savings are completely gone. $2.3 trillion of U.S. excess savings have been spent over the last 3 years. As a result, excess savings are now negative 216 billion according to the Fed data. Meanwhile, the U.S. credit card debt is a record $1.1 trillion. So that is what we're looking at right here. So this is the credit card debt. Kind of spiked up here, pulled back a little bit, and now it is just soaring again. That is not a good signal. See, the other thing that is hurting banks, since all the savings are gone, they have less and less money to lend out since the money is all spent. So this is a look at unrealized gains or losses on investment securities. U.S. banks now facing 515 billion in unrealized losses. Sure, you don't have to take the losses until you sell the security, but if they're not getting any better, eventually they have to be sold. This is a huge problem. So this is the number and assets on the problem bank list, all FDIC insured institutions. Look at this, it just keeps increasing. Not a good sign. It's much higher than it was in 2008 with the financial banking crisis. And look where it went after that. So last week we talked about the BRICS are eyeing a central creation of a central bank for a currency issue. They all met in Russia this last week, and 159 countries are set to adopt the new payment system introduced by BRICS, known as BRICS Pay. 159 out of 195 countries, more than three-quarters of the world is adopting BRICS Pay. BRICS bloc announced the creation of blockchain-based payment form. This will redefine global economics. And so what does this mean? What does Russia's removal from the SWIFT banking system mean for the future of global commerce? Removing Russian banks from the SWIFT system is accelerating the global economic realignment. So that is the story. And that is kind of the things that we're facing. So I kind of took a look at what is the top area of investment right now. Transportation truck is number one this week. And this kind of looks pretty good. XPO, another diversified company that was split out from XPO, is RXO. It's pulling back. It's kind of basing. And here's Old Dominion Freight Line, kind of basing as well. Let's move this out of the way here. This over to here. So I'm going to take a look at this is the daily market average on the New York Stock Exchange. This is S&P 500, kind of flat right here. Here's the Dow Jones Industrial Average, which we just looked at a little earlier, selling off. And advanced decline line has passed the moving average over here and is starting to head down. Let's take a look at the NASDAQ and the American Stock Exchange as well. Here's the Amex. Seems to actually be doing better than the NASDAQ. And here's the NASDAQ. And here is the advanced decline line. Was heading up here and is pulling back under the actual moving average. So that's kind of a look there. And I'm going to take a look at one other thing here, kind of adjust this and get to where I want to go. So this is blue dot, what's kind of outperforming the S&P 500. We'll just look at a few of these. Q32 Bio develops therapeutics targeting immune systems. Working on a base right here, kind of a cup base, was up 6.24%. Vista Energy continues to lead, bouncing around here, and it breaks out right over here. It was up 8.42% on Friday. Earnings came in at 102% year-over-year quarter. Galaxy Payroll Group. Look at that nice move. Hong Kong recent IPO. We'll see if that can continue to hold up as most IPOs eventually fail. AT&T pulled back 1.67%, but it's doing pretty well. Aravent Biopharma. Looks like we got a little bit of a breakout here. It's up 2.13%. Biopharmaceutical company develops medicines to address unmet medical needs of patients with cancers. Guardian Pharmacy Services, recent IPO. Let's just add this to our IPO list. It's trending higher, up 0.6%. Front View Real Estate Investment Trust. I could try to break out in the pivot and then pull back quite a bit. And then bounce back, up 0.66%. Recent IPO as well. Oil and gas IPO. Interesting, a lot of these are IPOs. Cognate Biosciences. Looks like it's breaking out and it pulled back. Delcath Systems. Working on the right side of its base. The cup formation. See if it produces a handle and it breaks out. Earnings going to be up 55% this year, up another 87% next year. And finally, General Motors definitely broke out right here. It's pulling back into the pivot zone. So it was selling off about 1.23%. See if there is any other thing I want to share here. This was what was breaking out last week on Friday. Macom Tech Solutions. Pretty nice move up here, 5.03%. Talked about Tesla before. Tesla breaks into the pivot zone on Friday. Got a cup with a handle here, gaps up, and moves into the pivot zone. We looked at Vista Energy before, and ResMed gaps up 7.12%. Their earnings came in at 34% up. Supposed to be up 21% next year, another 10% the following year. And that'll wrap up our weekend update. Hope everybody has a great Sunday. Go out there and make a difference. And we'll catch you up with you later.